we talked last year, and I believe the year before as well, about certain opportunities that Sprott and you have identified in the market. I want to go through each of these. The first one has to do with natural resource finance, and something that, to my understanding, occurred as an outgrowth or a consequence of banking reform following the financial crisis. And so I'm talking about things like Basel III, constraints put on banks on how they can lend and how much capital they have to hold as a function of the assets, and how that sort of unintentionally benefited Sprott and people like us. So can you talk about that a little bit?
As you know, Albert, I'm no fan of regulation, but I like regulation that benefits me a little more than I like other forms of regulation. I've become less ideologically pure in my declining years, and the change in regulation that you describe is fairly comical, at least to me. One consequence of the global financial crisis in 2008 was that banking regulators on a global basis changed the way that large money center banks could lend and could account for risk. And the consequence of that was, according to the regulators at least, if you lent money to a sovereign borrower, that is a nation, and the loan was denominated in the same currency that you reported in, that was regarded as a riskless loan. The big thinkers in the world believe that societies, that governments don't go broke. History, of course, would point us in a different direction, but that doesn't matter to the big thinkers. And so, as an example, were you Deutsche Bank or Banco Santander reporting in euros, and you lent money to a wonderful credit, let's say Greece or Portugal or Italy or France, that's regarded as riskless, and you required no equity backing for that loan. You could borrow at the discount window 100% of what you lent back to the sovereign government, and at least for balance sheet purposes, report no risk. By contrast, if you were to make a project loan to a non-investment grade borrower, that is a corporation that didn't have the balance sheet strength to borrow against balance sheet assets, but rather had to borrow against the asset that was being financed. Let's call that a first mortgage. The regulations have become so onerous that banks effectively can no longer do project finance for non-investment grade issuers. Now, if you look back to my first 3 decades in the mining business, mining construction finance, and for that matter, oil and gas project finance, was dominated by the big wholesale banks. Chase Manhattan, Royal Bank of Canada, BMO, Barclays, Deutsche Bank, people like that, Hong Kong, Shanghai Bank. The consequence of Basel III is that that business, which is a $10 to $15 billion a year business, all of a sudden had massive capital exodus, as the traditional providers of capital in that business had to flee. Markets hate a vacuum. Opportunity hates a vacuum. At a point in time where global interest rates fell by half, the interest rate paid in project finance on a global basis doubled. That void filled by many specialty lenders, most prominently among whom was Sprott, a business that didn't exist 10 years ago, has become the largest contributor to our EBIT. So as you say, an odd circumstance occurred where the regulators, perhaps good intentions, I can't speak to their intentions, acted in a way that was deleterious to the industry overall, raising its cost of capital, but has been extraordinarily good to Sprott and Sprott's large shareholders like myself.
Right. So banks having faced being placed in the position where they choose between having, say, a 0% to 20% risk weighting on government securities versus 100% risk weighting on these loans, did the intelligent thing. And it's interesting, this is regulation that made banks less profitable. Probably not many people in the audience crying tears.
Right.
Helped out us. And we seem to be sort of the innocent beneficiaries of this regulation, because I don't recall you and Peter making an inordinate number of trips to Washington or Switzerland during the time that this regulation was being drafted.
Well, in some fairness, Albert, I don't think were I to go to Basel or to go to Washington, that I would get much of an audience anyway. So
Right.
I want you to acknowledge that I'm blameless.